Hi everyone, welcome to the Timing Research Show for March 14th, 2016. Today we are going to be talking about the 129th weekly report from Timing Research. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download this or any past report there. I have Matt Buckley back to host, so I'm going to go ahead and turn it over to him.
Hey, thanks, David. I appreciate it. Welcome aboard, folks. We got a great panel scheduled for today. Very interesting day and an interesting week, obviously, with the Fed meeting coming up. We have oil in the news, and it looks like we have an Iwo Jima line right around the 200-day moving average. So it's going to be a very good session. And as usual, David's done a great job of getting together some of the 500-pound heads in the business together for this round table. And I want to go around the room and introduce everybody. Sang Lucci, Larry Gaines, and Kurt Capra. So let's just go top to bottom and let us know your background, how you got into trading, and where you are right now and who you're with. And then I'll take it back and we'll go ahead and get airborne. So Sang, let's start with you.
What's going on, guys? Thank you for inviting me here to this round table. My real name is Anand. I came up with the sort of moniker Sang Lucci here to just kind of showcase some heavy trading that I've been doing in the past 5 years, I would say. Predominantly an options trader. Started trading futures a little bit recently, just with the increased volatility that we've gotten so far in 2016. Got started trading back in 2006 as a young guy looking for some action besides getting a regular job in finance, I would say, and been hooked ever since. Started trading options more 2009 once, you could pick up stocks like Las Vegas Sands for $1 or $2. It was a really juicy time to trade options. And that's it. Been trading weeklies too since they came out in 2010. That's obviously a much more difficult game, but enjoying the volatility so far this year.
Awesome, Anand. Welcome aboard. Yeah, starting trade options 2009. Obviously, a very interesting time to be trading options with the. I was in the SIBO, around that time when the VIX was up at 80 or 90 or whatever the hell it spiked out at. Where are you located, Anand?
So right now I'm in Boston, but we have an office in Manhattan where we basically just delve into a lot of research, a lot of technology just for finding options order flow. We're also messing around with automated strategies as well. So we got a lot going on out there in New York.
Okay, great. Definitely want to talk to you throughout our conversation today about order flow, because not a lot of people who are new to options or don't even know what options are understand order flow and how critical that can be to potentially profiting with options. So I'm looking forward to that.
That's our bread and butter, man. That's our bread and butter.
Awesome. Good to hear. Okay, Larry Gaines. Larry, good to see you and work with you again from Power Cycle Trading. Tell us a little bit about yourself and what you do at Power Cycle Trading.
Yeah, thanks, Matt. Yeah, so thanks for having me here today. I've been actively trading for over 30 years and previously was executive vice president, ran one of the largest oil trading international trading desks for a company called Transworld Oil for over 10 years, and so great learning experience there, to say the least, and started trading options with this group way back when. And started my own company in 2010 to basically trade and teach educational courses on trading using my trading system and options. So that's what I focus on, is directional trading with systems and then using options for the trade itself. So been doing it for a long time, love it, and it's the only thing I know how to do, basically, and I enjoy it and constantly on that journey of learning.
That's great, Larry. And where are you located?
I am in Austin, Texas.
Love it. 6th Street. Love.
Yeah, I don't get down there very much, but it is a great spot to live.
Yeah, I think I remember being on 6th Street. I'm not sure. And then finally we have Kurt Capra. Kurt, good to work with you and see you again, my brother. Tell us what you do at Pristine.
Awesome. Yeah, likewise. Glad to be back. I've been trading for going on 9 years now, but Pristine's been here in this space since '94, so been through the ups and downs of any and every market environment possible, and obviously, been loving it. Still here to this day, and just enjoying the volatility and focused on really just price action. I mean, I personally don't get into options too much. Right now, my focus has been more on Forex for my own trading, but I'm looking at the markets every day, seeing what's going on. We've got a trading room where they're constantly talking about different things. So, I want to be in the know what's going on, where things are moving, because I actually started in the beginning of my own career trading futures, and things started to get a little slow after 2008 with the whole subprime thing, which was crazy in and of itself, of course. But when things started to settle down, it got a little slow, and I just wanted to venture out to a little something more, and like I said, got into Forex and haven't looked back. Just been really loving it, and doing the same thing every single day.
Excellent. Kurt, where are you again?
I am actually in South Carolina, Myrtle Beach, but we have an office in Manhattan as well.
Okay, great. So you're trading remotely as well. Just shows the power of computers and technology. You can be sitting on a boat, or you can be sitting in the Cayman Islands and trading, which is pretty cool. As David said at the top of the show, my name is Matthew Buckley. My call sign is Whiz. Obviously, that's not my God-given name. My parents did like me, as far as I know. I earned that call sign flying the FA-18 Hornet for the United States Navy for about 15 years. Flew 44 combat sorties over Iraq, and also graduated from the Navy Fighter Weapons School, which many of you know is Top Gun. Taught myself how to trade options early in the 90s before Al Gore invented the internet. So essentially out of books, and then applied everything I was learning flying fighter aircraft, the discipline, having a strategy, implementing tactics, contingency planning, knowing when to get out of a bad situation, taking the emotion out of it, and it really turned my trading into something semi-professional. And those methodologies and the way I traded eventually allowed me to pop up on the radar of one of the largest volatility arbitrage firms in the country, called Peak 6 Investments, headquartered in the Board of Trade right there at Jackson and LaSalle. So was the managing director of strategy for Peak 6 Investments, and then started my underneath Peak 6. I started the Options News Network. I was the founder and CEO of the Options News Network, $25 million company in 1 year. We went from one user, me, to 80,000 users in a year. So that was pretty cool. Helping out, mom and pop retail traders such as the folks on David's webinar here today to see behind the scenes what's going on in the options market. Speaking, as Anand alluded to, talking about flow. Hey, if Steve Jones, wearing his Goldman Sachs jacket, walks into the pits and says, "Hey, give me, 200,000 July Ford 40 calls." Well, guess what? Something's going on. So we'd report on those things, and we had an absolute blast. But unfortunately, I hated Chicago, like the people, didn't like the winters. So I ended up down here in beautiful South Florida, and haven't looked back. Absolutely love it. Okay, so let's go ahead and get airborne. So we got a great panel, so this is going to be interesting. We'll just keep that same order throughout the day. Anand, Larry, and Kurt. Let's go with David's question one to all the traders out there. What developing events, technical or fundamental, or I like to add, your gut, seat of the pants, or just professionally or personally as a trader, will you be watching out for during the trading week of March 14th to the 18th? That's obviously this week. That might have a positive or negative impact on the S&P 500 or other U.S. markets. So Anand, over to you, my friend.
Sure. So for this week coming up, obviously the biggest thing would be the FOMC. Similar to Thursday's action that we had out of the ECB, where we see some monster sort of gaps happening in the morning that either fade out, reverse completely, or they continue to the upside. So depending on the language that comes out from the FOMC, that's definitely going to cause a lot of action in the futures markets, and subsequently with some, with certain sectors that certain large cap sectors that we tend to watch. I would say beyond that is the order flow. So, for example, during this whole rally from, I would say, 182 on the SPY up to where we are now, so far all the order flow that we've seen every single day through our proprietary scans are predominantly bullish. They're predominantly bullish, and they just work through different sectors. So, for example, it started out a little bit with oil and gas, started out with a lot of those beaten down materials names like your FCX of the world, your BTUs, your Petrobras, all these beaten down names, that have really been hurt for the past couple of years. Even casinos too. If you take a look at Wynn or Las Vegas Sands, these are names that have jumped 50% literally just with the stock for the past couple of weeks. So finally, we're seeing a lot of these names take control versus them usually tagging the FANG names, as everybody likes to watch, the Facebooks of the world, the Amazons and things like that. So watching the rotation as far as leadership, right now we're seeing a lot of activity in Bank of America calls for this week as well as for a couple of months out. So maybe if there's continued rallying here in the financials, continued rallying in oil and gas, continued rallying in names that were neglected for the past couple of years, I think this rally still has considerable legs. So I'm pretty much on the bullish side here for this week. We're also seeing SPY calls, VIX puts being bought everywhere. So we remain on the bullish side to possibly 204. There's a big gap on the SPY. I think we can easily retest that by Friday. When you have these big news events weeks, most of these moves tend to happen on the overnight, which kind of sucks for the intraday traders. But again, those who want to get ahead of these moves, you're kind of forced to follow these things and hold for the overnight move. So I think a lot of things could happen overnight just off the FOMC. But I think 204, 205 on the SPY is definitely a possibility for this week.
Okay. Anand, what do you see in Bank of America? What strikes or what activity?
You know what we're seeing? We're seeing 14 and a half. We're seeing 14 and a half calls, maybe about a half a mil to a mil. These things just got bought today,
Wow.
and it's looking like they're going out to the end of April. So 422. If you look at the 422 weeklies, a solid amount is being open. They paid about a quarter for those. So they're going to need a move to 15, possibly over that. If Bank of America is at $15, this market's going higher.
Is this a? You think it's in? I don't have BAC in front of me. Is this an earnings play? You think, or?
I don't think so. I think it's just a further rotation into the financials, which is still kind of a beaten down sector. We're also seeing April Goldman Sachs 165s, and Goldman Sachs is a huge lagger across the board. And if you see Goldman Sachs over 160, this market's going higher.
Well, you know what, Anand, and I'm going to agree with you. And I think one of the reasons we might be seeing a lot of upside call buying in the financials is because of the Fed. I have a saying I like to tell my traders at TGO: when interest rates are high, stocks will die. When interest rates are low, stocks will grow. Well, that's got an asterisk on the end of it, because actually when interest rates are high, some stocks are going to grow, and it's the financials. I mean, the financials can't get out of their own way right now in this low interest rate environment. So anytime we hear a little bit of a rumor that there might be an interest rate rise, the financials catch some life. I mean,
you know what, Matt? I love and I love that rhetoric, but I do want to throw out there. You remember what happened when the first interest rate increase happened. You remember how piled in people were to Bank of America going over $20. This stock was an $18 stock. Everybody and their mothers were buying into that trade, and everybody got washed out completely. So, even with these interest rate increases, yes, absolutely, money flow could come back to these financials, but this market has been brutal for those people playing that trade,
Okay, good points. Very, very good points, Anand. Okay, Larry, over to you.
Yeah, thanks, Matt. The key thing I'll be keying off of over the week will obviously be the FOMC, but the other thing is, you mentioned it earlier, is the 200-day moving average. So we're just stuck right in it right now on the S&P futures, the SPX, et cetera. So if we get a push through that break and a close over, then I'm looking for 2050 to the upside, which would be 205 for SPY. And the other thing to point out, if you go into your option chains and you look at this week's expiration and look at the expected move, it puts it up there to 205, and there's huge option open interest both for the SPX and SPY at 2050 for the SPX and 205 for the SPY. So kind of lines up that way. So if we get this pop through the 200-day moving average, which comes in right about here at 2010 for the S&P futures, then and you get a little bit of a move and hold over that for a day or so, then 2050's in the cards.
Okay. Kurt.
I'll definitely be watching the FOMC. You also got the BOJ with their statement later this week too. So those can definitely be some. I don't even want to call them leading indicators. I mean, they can be catalysts for intraday volatility, but when it all comes down to it, you look on the daily chart. If you're talking about what's going to impact the market longer term, the FOMC decision really isn't it. There might be some intraday volatility, but you're not really going to get more than that. You go back and look at daily charts, you can't tell me where the last FOMC was without looking it up. So again, there'll be that intraday volatility. You'll get the whips and wiggles, but for the long term, it looks like right now markets are moving higher. And one of the interesting things is the strength that we've seen in the SPY and the weakness that we've seen in the Qs. So what I'm thinking here that may possibly set up this week and going into next week, where you've got Apple and their event March 21st with the iPhone and whatever else they may decide to do or come out with, we may start to see the Qs leading and helping lift the SPY up. So we may see more acceleration out of the Qs and the SPY playing a little bit of a weaker game. You can start to already see that today, where the Qs are stronger than the SPY. And in addition to that, I will also be interested to see whether the SPY can hold the 202 to 200 area. If we break under 202, then I think we have a good shot at going down towards filling that gap from Friday, and that could get interesting. It's going to put the bulls on the heels, and we'll see how aggressive, how committed they really are. So that'll be something to watch as well.
Okay, yeah, I agree with just about all that, Kurt. Let me see if I can do some screen sharing here. Let's see. Start that, and then we go back in time briefly. So, like Anand hit on, obviously the Fed meeting on Wednesday is ginormous. Like we saw with the ECB, like Anand said last week with Mario giving up a little bit more of the to the negative interest rates, and also expanding his asset purchases with his bond buying. It's funny now that the market, the folks in the bar are kind of shrugging their shoulders at the bartenders as they're getting them more and more drunk. It's having less and less of an effect. So I think we might see a little bit, to be honest with you, on Wednesday, a little bit of a sell on the news. It's kind of expected that the Fed's going to sit on their hands this week, but I think they're definitely going to do this. They know that they can't raise now, even with this. This is a little much. This is kind of a rip your face off rally. That was a little much too. That was a pretty big implosion, and we've given almost all of it back. We're holding just shy of this 200-day moving average, and same type of thing as we got when we tried to bust through this 50-day moving average. We got a little bit of wallowing around. I think we're going to get some wallowing around on this this 200-day moving average. But the Fed is definitely going to sit on their hands. It's how they telegraph, I think, is what's going to be the big deal. A couple of other events this week. I think that we're starting. One of the reasons that the market's wallowing around right now, or potentially trading a little lower, is oil. Here we go again, right? Oil back above 40. Yay! Done with the oil impacting the market. And we're not done with that by a long stretch, and I think we're back to the lower 30s here pretty soon. Whenever you get a bunch of countries like Russia, Venezuela, Saudi Arabia, Iran, and Iraq, and the UAE in one room, and you try and get a consensus, or at least some. It ain't NATO, folks. It ain't a good group of dudes. These folks aren't the Girl Scouts or the Boy Scouts. And you had Iran say over the weekend that, you know what, we ain't doing any sort of production. We just got to this party. We're not doing any production cuts or even thinking about it until we get to 4 million barrels of oil a day. So I'm going to be watching the Fed this week. I'm going to be watching oil this week. I agree with Goldman, or Goldman agrees with me, that the relief rally was too fast, and they're not taking any more risk right now. So I think we wallow around. And don't forget, folks, I'm not going to go through all of them. You can go to forexfactory.com and click on their calendar. We have everything from Empire Fed, Philly Fed, some FOMC lieutenants speaking throughout the week. We have core retail sales and regular retail sales, industrial production, building permits, National Association of Home Builders, a lot of macroeconomic data this week. Not that that's going to swing. It's in the old days, some of that macroeconomic data used to actually move the markets around, but nowadays we just kind of shrug it off for the big stuff like oil and the Fed this week. I don't think China's going to impact us at all this week. They had some bad industrial production numbers over the weekend, which I think is also why we're a little bit hungover this morning. But other than that, it's and oil. Okay. Let's get back to. Let me stop screen sharing there. Let's get back to our questions here. So after question number 1, Anand, let's go. Let's head your way, my friend. Question number 2. Based on those same things that we talked about, tech, fundamental, your gut, everything you see, are you going to predict? I think you said higher, but let's just go around the room and get a confirmation. Would you predict that the S&P 500 will move higher or lower from Monday's open to Friday's close by the 18th?
Yeah, I'm gonna stick with my prediction. I'm gonna say we're higher. I think both you though and Kurt brought up some great points. And by the way, let me preface this by saying nothing would make me happier than to see an absolute sell the news kind of situation on the FOMC where I could literally basket short 25 different names, and have a great weekend. I would love to see that. But again, I think we continue to squeeze higher. The flow that I've been seeing is again still pretty bullish. And on top of that is that when you have some of these big moves, catching that top is always the most difficult part. And to me, I believe a lot of technical traders who look at charts and who look at a lot of moving averages and things like that, they stretch these numbers a lot. So a lot of people are a little bit too early to the party, and that causes further squeezing, or that causes a further move in that direction. Before all these people get washed out, basically, and nobody is in the trade anymore, and that's when these things start really moving to the opposite side. So I still think we got some upside left, but again, I would love nothing more than to see a 50-handle washout in one day.
Yeah, I'd love to see that too. That would shake a lot of folks out of the trees. Larry, how about yourself? Higher or lower by Friday?
Yeah, I'm going to stay with higher. I think I'm kind of follow the same kind of scenario that, kind of max pain, squeeze the shorts a little bit more. I'm kind of always a closet bear, but, this rally, we had a good spike, and then it's just been grinding higher to just keep squeezing the shorts. And if we can get that push to the 200-day moving average, I think we can squeeze more shorts, and then, potential target up there, that kind of 205 level. If you look at all the open interest, there's just a big chunk there, so kind of like a magnet. So I'll stick with that just kind of going with the max pain scenario.
Okay, roger that. All right, Kurt?
I'm going to go higher too. We've got these higher lows and higher highs now on the daily charts. You got the 20 and the 40 or 50, depending on what you look at, crossing one another, indicating more strength. I mean, you do have the weekly charts, which are slightly more bearish, but at the same time, you've got some form of a double bottom, no matter which index you look at, Q, SPY, Russell, what have you. So it's a tricky environment for sure. You know, the dailies, like I said, indicate higher, but at the same time, the weeklies are vulnerable to a rollover at any point, which is what makes it, as I said, interesting. So I'm going to say higher. I mean, that's what the daily chart's telling me, and there's enough room on the weeklies to where we could continue to move up. So, like I said, I'll go higher.
I think it was you, Larry. I'm like you. I'm a closet bear. I just look at everything underlying this economy, and I know it really is. It's a MacGyver market. You know, it's being held up by a paper clip, a rubber band, and a straw type of market.
That's so true.
It's crazy. I mean, in pre-quote 2000, pre-Bizarro market, pre-2009, this market would be half of what it is right now. But since first of all, since I go last, I'm going to say that everybody's wrong, and it's going to be lower. I think the Fed, I think it's going to be sell on the news, and it's going to be an excuse to take some profits on this kind of little bit of a rip. And like you guys all said, this short squeeze that's driven us up to here. I'm wrong if we break today or tomorrow the 200-day with any sort of airspeed to the upside. I'm wrong. But if we don't and we just kind of wallow into the Fed, I think we're lower by week's end, and that's the right answer until you guys host it. Okay, so question number 3 is, Anand, give us a percentage of based on your higher by the end of the week.
Whew, man. I might as well just pick a number out of a hat then. Let's see. Let's go with I'll do 72%, man.
There you go. Okay. Larry.
I'll do 65%.
Kurt?
Got to go with the normal, 100%. I mean, it's 100% for me, and unless we start to, with any kind of conviction, break on, like I said, the SPY under that 202 to 200 level. If that happens, then we've got that big open gap, and it really shakes the confidence of the bulls, and then we could start to see the weekly chart kicking in. So if from where we are right now, we look higher, and I'm 100% confident in that, unless, like I said, those levels get broken, and then the plan has to change and the bias has to change with it.
Kurt got one thing right in everything you just said, his probability. I'm 100% as well. 100% as well that we close lower than where we opened on Monday. I never squeeze the trigger. I'm actually going to be sending out a bear call spread on SPX here in a little bit to my subscribers, and I never squeeze the trigger on real capital or a real missile unless I'm 100% certain that it's going to hit its desired target there. So there we are. So, David, we got a little bit of controversy here, man. There you go. All right, so let's move on to we hit on this question, but I want to kind of take a deeper dive into each one of your thoughts about the Fed. I know we all kind of did a drive-by of it real quick, but go a little deeper with it for question 4, A and B. Do you think they're going to raise rates? How do you think the market's going to react? And then let me add a 4C. What's the your longer term outlook for, let's just say 2016 for the Fed and how the market reacts to it? Anand?
Man, this question I feel like has just resonated in everybody in finance for probably the last year and a half, 2 years. I mean, what other question do we ask ourselves literally once a month or twice a month? Whenever these kind of minutes come back around, they hit us in the face, and they continue to delay, and they continue to give either dovish comments. You'll always see that keyword in every news article you read is the Fed being dovish. Again, this is a tough question to answer, but I'll just throw it out there. Just with kind of what's going on across the world, as far as interest rates. It's tough to believe that we're going to be this sort of gunslinger, kind of doing our own thing and increasing rates, if not just keeping them where they are. I do think the reaction to the markets now, after such a move has been thrown out there from the lows, and they've continued to buy up, a lot of different names out here. I continue to believe that there's no other good place for cash right now besides stocks. So regardless of a small interest rate increase or not, I still think stocks, people look at this situation as they're a good buy. They're a good buy, and they'll continue to be a good buy, and we'll continue to see that kind of rotation. So as far as this week reaction to, let's say they go ahead and throw out comments that they are going to raise soon, I think, as Matt said, it will be an excuse for some profit taking. But, to retest those lows that everybody is sitting there looking for, 180 on the SPY, possibly lower, I don't think we see that until the end of the year, or until it's likely that Bernie Sanders will get elected as president. So, I continue to look at the FOMC as more of a non-event than something that is really going to promote some serious volatility in the markets right now.
I think that's a great way to put it. Except the Bernie Sanders part.
Well,
okay,
you got to
Larry.
feel the burn, baby. You got to feel the burn.
Feel the burn, exactly. It's amazing that our political system, where we are, we've produced two people on polar extremes. It's just, my God, man. I'm heading to Brazil. I don't know where you guys are going, but I'm going.
I think you know what, finance and government right now is providing 24/7 comedic entertainment. When you look at the news, when you watch CNN, or you just sit there and read Market Watch, I cannot stop laughing.
Yeah.
That's all it is. It is pure entertainment for me.
Oh, it's crazy. It's it is going to be a grab the popcorn for the rest of the year to see what happens. Potential Democratic nominee that might be under indictment, and a Republican nominee that's just out there. It's funny. I feel bad. I mean, I'm down here in Florida, and I gave a speech about a year ago down here in Hollywood, and Marco Rubio spoke after me. Really nice guy, really really good dude. So I'm like, it's crazy that we've gotten here. But I digress. Larry, how about you with the questions 4, A, B, and the C part that I made up?
Yeah, sure. Thanks, Matt. Yeah, could I share a screen for a minute up here?
Yeah.
Just show my chart.
Yep.
Oh, is that up? I'm not sure if you can see it or not.
Yeah, we can see it. You bet.
Oh, okay, great. So yeah, I keep coming back to this 200-day moving average. First off, the Fed, I think it's a kind of a non-event. I don't think they're going to do anything. They would have already telegraphed it if so. So everybody pretty much feels that they'll go through this meeting. Then if they're going to do a rate hike, it'll be in June. So it's kind of discounted. So I think that if they'll probably come out and say whatever. It just depends on how they sort their communique as far as the language. But we could get a pullback. But if we can hold in, and if it does break this 200-day moving average right here about 2020, and it holds in here just to consolidate, if it doesn't pull back too much, then I think after the Fed is out of the way, Thursday you get some chop. Friday, though, be an option expiration. It's just, again, max pain. If you go back and whenever you can take a look at the open interest on the 205 strike and the 2050 on SPX, well, actually Friday would be the 205 on the SPY. You're going to see the potential max pain to push it up there. So you can see the last time when we were back here at the 50 simple moving average, which you talked about earlier, the 2050 level or the 1950 level, it kind of chopped around and then it exploded. So if the 200 can kind of get the same, holding effect, then I think you could explode it and press to the 2050. Now later in the year, I think that the market's going to pull back and retest the lows, and I think that the markets are just so financially engineered to the extreme that something's going to break, and they're running out of ammunition. So I think things will get a little bit hairy again at some point this year, and we'll retest those lows and break those lows. That's what I'm looking for.
Okay, sounds good. And Kurt?
I pretty much agree with what the other guy said as far as the FOMC being more or less a non-event. As I said earlier, you go back and look in the past, and you can't tell anywhere on the chart where the actual event took place. So unless you're trading intraday, I think the FOMC and whatever they decide to do and or say is just going to be kind of something you got to digest and see how the market responds. But more often than not, it just continues in the direction of the trend. Most news in general is baked into the market one way or another. The only thing that I think is something I'm not convinced on is going back down to retest the lows around the 180 level on the SPY. I mean, I've heard many people talk about it. The weekly chart, I mean, it's going sideways. I could kind of see it possibly playing out, but yeah, I don't know. I don't know. I mean, we'd have to have some really bearish things happening, some major fear coming in, because we've held this 180 level so many times. You go back, you got the August low right around 180. You got this double bottom around 180. It's a huge level, and I think if we do end up going back down there, then we're not holding it. I mean, it's almost like there's no way that we would hold it, but having seen it hold so resiliently and now trending higher on the daily chart, I'm more in the camp that we're going back up to the 2015 highs, and who knows from there, maybe well above. Now I know the economic landscape doesn't necessarily support that at the moment, and there's a lot of uncertainty with presidential candidates and what have you, but the proof is in the pudding as far as I'm concerned, and the pudding is the chart. I don't know how you other guys feel about it, but that's kind of my stance.
Well, it's a good point, Kurt. I mean, you're right. Most of the FOMC events, unless you're looking at an intraday chart, they've been non-events. The only ones that were really big events, in my opinion, were listen to me, back in the day, like I'm 90. Back in the day, when the Bernanke, was guess the taper. Going into those Fed meetings, when we're getting $85 billion a month and people trying to guess when he was going to start the taper, we'd see the VIX. It was May or June of 2013 where the VIX went from 12 to 24, just leading into that Fed meeting. There was some uncertainty, but even to your point, Kurt, even with the VIX going from 12 to 24 leading into that Fed meeting, the market was going up. The market was still just kind of doing that melt up because it was on that Fed's $85 billion a month in hopium. So I'm going to agree with you guys. I think the Fed is a non-event this week. The market's, if anything, is going to sell on it and use it as an excuse to take some profits from this recent relief rally and short squeeze. Because I really don't think we've gotten off of these lows on anything seriously fundamental. China still sucks. Europe is still smoking the hopium from Draghi trying to get their engine started. The Middle East is a complete clown car. And oil might have recovered a little bit for now, but all the 500-pound heads I talked to say that was a short squeeze too, and it's a lot of hedging. So get ready to hear from the oil sector again, and especially the oil services industry. I mean, there was an article in the Journal over the weekend about a lot of big towns or even small towns in Texas that are just completely gone now. You forget about what a oil bust does to the oil services industry, or a diner, or a convenience store, or the real estate market, or the restaurants in these towns that really depend on oil. Schlumberger, Halliburton, BP, NOV, any of these guys, they're not charities. They don't keep people on payroll just to walk around in circles, and they've gotten rid of a lot of those jobs, and that's going to impact the economy as well. So I think the Fed is taking a wait and see approach to the market, and I think I definitely, barring any sort of cats and dogs living together mass hysteria, I think that the Fed raises interest rates in June. And then what is it? The next one after that's October or something like that. But to, I think, Anand's point, what are you going to do? Stick your cash in a Folgers can and bury it out in the yard. Yes, I'm old enough to know what a Folgers can is. This is the best place for cash. Period, bar none. So we melt. We're going to keep melting to the upside until we lose all complete faith and trust in the central banking system. So, okay. I think that covers all of our formal questions, but I always want to sneak in some of my my good stuff at the end because I like going around the room and picking brains and getting either some free trades or some other good stuff. So let's just go around the room, guys, and let us know what you're looking at right now. Either a good juicy trade you're looking at putting on today, tomorrow, or you got on for this week or for the year, or something, or a sector that you really like. Give us a couple of your best picks for David's crowd here. So Anand, we'll kick off with you. What are you looking at? What do you got on? Or I know you gave us some Bank of America and some other good stuff at the beginning, but what do you like right now?
So I'll defer to what we were doing last week in the room. Most of these travel stocks. So if you look at Expedia and you look at TripAdvisor now, they're talking about a buyout here with TripAdvisor. This stock is up huge right now. Expedia was at 105 and now is trading about 117. Priceline, we caught a great move on Friday. You still got upside here today. I don't know if you guys saw my screen share, but I was toiling around with a SPY put even just today, and I can't see sellers anywhere right now. So I'm going to continue to rotate into some names on the long side. A couple of them that I do love. MGM here is looking pretty good for a move to 22. If you look at Chipotle, that whole neurovirus scare again that happened last week, coincidentally at a town not that far away from me, this thing came back pretty good. I think it can get back up to 530, 540 area, so that thing's looking good. And then you got LinkedIn and Twitter, which might finally catch a little bit of a bid. Both of them got decent trading action. So I'll be looking at names like this. But you know what my trade for the week is going to be? Is to sell puts. Just sit there and sell puts on a bid because I think we just kind of melt up. It's going to be a difficult kind of environment, at least intraday kind of trading environment, where I can just sell out of the money puts and collect pennies here for the week, basically. So that's those are the names that I'll sit in there looking at. Obviously, the banks too as well.
Let me. I don't want to speak for you, Anand, but hopefully they're cash secured, right?
Indeed.
There we go. Because I know my folks who are on the webinar here, their head probably just fell off. So hardly anybody in the world, folks, sells just naked puts, right? Even if they're really, really, really rich, you want to cash secured puts is the way to go. But I love, we call it, I'm sure you do, buying a stock you love at a discount potentially. So that's a great tactic.
I get pretty crazy intraday and then towards the end of the week because I love the time decay play. You know what I mean?
Yep.
So for example, Friday where it was just enough momentum to the upside, I'll get pretty. I would guess what could be considered crazy, and sell out of the money puts on names like Priceline, for example, and then just sit on those because I can shave 50 cents to $1 in premium and just slowly move up with the name, And again, though, what you said was huge because most people don't realize how risky it is. Even though it looks like a cakewalk, most people don't realize how risky it is. I have some horror stories of being naked short something and thinking I was good, and then all of a sudden some random buy program hits the tape and my options go to the moon, and all of a sudden I'm looking at a triple, quadruple the loss than expected. So these things get pretty ugly, and you definitely want to be real careful, if you're selling naked.
There you go. Well said. Important safety tip, folks. That doing anything naked with options can be extremely, extremely dangerous. So always either have the cash available or just have a spread on. So that's nice. But I'm the same way as Anand. Love being a seller, man. Love being the house. yeah, I have a saying: unched on the day equals time decay. Unchanged on the day equals time decay. So as you're sitting there, you can have a dollar bill flying in your pocket every once in a while. As just time goes by, if you're a seller of an option. So that's
Love it, love it. And fortunately, like most of the world, especially retail, is all going to be long directional. You know, they're going to be long directional. And I would say what? I mean, I'm sure you would agree with this, Matt, is that what, 70% of the time we're doing nothing?
correct.
More or less, 70%, 80% of the time your stock is doing absolutely nothing. And
Hanging
options,
out.
it all comes down to timing, you know. So if you can't
Correct.
get the timing right, and you're a retail guy who wants to play directional, guess what? You're sitting on a losing ticket every single time you hop into these options. So, you know, there's a lot of misinformation out there as far as option goes. So, you know, I would say if you're in that camp, to anybody who's listening, you know, try to stick to some equities or futures until you really figure out the options game.
Good advice. Well said, Anand. Okay, Larry, what are you looking at, my friend?
Yeah, I like a couple things. First off, I like Google here to push higher. It looks like it's starting to break back to the upside. You know, it's been consolidating sideways for about two weeks here. Looks like it's popping back up. It's moving back above its 50% retracement. I've got momentum indicators showing to the upside. So I'm looking for maybe a move back up close to 760 in that range. So I like
Love Google, Larry. Love Google. There was a huge call spread bought on this thing last week.
Okay.
And huge puts being sold on that name too. The price action is great. I love that call.
Yeah, I like that. So the only thing, the implied volatility's dropped off pretty hard, so you're not getting a whole lot of premium. But I do like Google to the upside. The other thing I like is what Matt referred to earlier, bear call credit spreads on SPX. I'll be looking to pull the trigger, but not right away. I want to see how the 200-day moving average pans out. But if that starts to falter, or if we see momentum pull back, which I think we will, if we get to say 720.50ish in that area, if we get that pop, I want to, you know, put on some bear call credit spread exposure, collect some premium there on SPX. That's the other thing I'll be looking at.
That sounds good. Agree with all those, obviously. Kurt.
Obviously, you know, with Forex, I really don't see too much in the way of great daily trends at the moment, so I'll just be focused on intraday volatility opportunities. But as far as equities go, I mean, definitely I think Apple something to keep an eye on. It's been a little weak relative to some other stocks out there, but it's holding well. You got the 20 crossing above the 50. It's looking strong, so that's something I think has some upside potential in it, especially if it gets a little excitement ahead of that March 21st event. And also Facebook. Facebook's been sitting at this prior high around 110 or so, just kind of flirting with it. If it can break above it, it's easily got a shot back up to the prior high above 115. So that'd be another thing I'm interested in keeping an eye on. And of course, Facebook's just been one of the strongest stocks out there relative to how it's correlated to the market. But other than that, you know, the other interesting thing I think we can keep an eye on, and I'm sure you guys have some insights into this, especially being the options players. The VIX, you know, if it breaks under $20, could easily head back down, I think, at least towards 18. And it'll be interesting to see if that happens, where that'll put the market at that point, you know, and I think that's the other thing to keep on the radar or you know, the storyline as we go through this week and into next.
It's a good point, Kurt. I have another Whizism, so to speak. When vol's cheap, you buy it. When it's expensive, you sell it. So VIX starts getting down there, back into its old, quote, resting heart rate. Volatility tends to revert to its mean, right? It's like a big, you know, think of a big pasta bowl and putting an orange on the end of it and rolling it in there. It's eventually it ends up in the middle after rolling around for a while. The VIX will get back down to its resting heart rate, and when it does, I tell my traders to get long vol. And then when it spikes and freaks the hell out on something, some sort of issue, we sell it. So it's just kind of that sine wave. The VIX isn't a stock. You know, the chart of a stock that goes up and to the right. It's all over the place. So I agree with that call on the VIX. And I also agree with your call on Apple. really found a home recently in the mid-90s here, kind of consolidating, getting back some of that institutional support, a little bit of a pop with the overall market, but I think we're starting to get back. We did iron condors for a month and a half, weekly iron condors for a month and a half, and we were 9 for 10, I think, or something like that. Closed out another one last week for a $2,000 profit. So I'm going to be sending this one out to my traders, my weekly option subscribers, as soon as I get off here. Another iron condor, a little skewed to the left, so to speak, or actually skewed to the upside. I think it's got a little bit of a pop to the upside for the same reasons you guys said the market was going to close up this week. So I'm looking at the 101-100 bull put spread, 75 contracts. Why 75 contracts? I'll tell you in about 30 seconds. So that's our bull put spread. That's me saying, hey, market, I don't think Apple's below 101 by Friday. And then the right upright in our football trade here is the 105-106 bear call spread. That's me saying I don't think it's going above 105 by Friday. And this is well within the at-the-money straddle for Friday and expiry. I think Apple tends to have pin risk. And if it does, it might even it'll pin closer to 105. That's about a 26 cent credit right now, and if we take a look at it, that's a risk of about $5,500. That's why I do 75 contracts. I have SOPs at Top Gun Options, standard operating procedures. In my $100,000 portfolios, I don't want to risk more than 5% or $5,000 on any one trade. Okay, Whiz, well, you're busting your SOP. Well, I can. I'm the pilot in command, and it's only about $500, so I'm good with it. For $2,000, so for potential gain of $2,000, 54% using at-the-money volatility and a 60% probability of at least breaking even, of at least hitting one of these uprights and the football falling somewhat in. Okay, so the break-evens of 60% is a good probability for me using current at-the-money volatility. All right. Well, I think we are good to go, gents. We're getting close to the hour point. Been a great session. Let's go around the room real quick. Anand, Larry, Kurt, let us know how we can get a hold of you, what you do, and how we could learn more about your services, and then we'll throw it back to David. So, Anand, over to you.
Sure, man. You guys can find me on Twitter at saying Lucci. That's most likely the best place that you can reach me. Again, we have a pretty extensive team. Guys that I've been with, that we've started funds together. We've basically built technology companies as well. We are currently in the order flow space, but are looking to also get into the behavioral side of trading. We're also very interested in all forms of automation, building strategies out together, whether they be in the option space, futures, or whatever it is. So we have a nice trading community that basically trades off of a lot of options order flow. You can check all this out on sayinglucci.com. We are partnered with a guy named Wall Street Jesus, and this is our options order flow guy, basically. You can find him on Twitter at Wall Street Jesus. Throws out a lot of free information as well, but again, we do recommend everybody just kind of come into the chat room. It's a great place for all kinds of traders, and we do stress that a lot of the order flow that we follow helps strategies of all types, whether you're swing traders, you're doing options, you're doing futures. It's always good to get a solid sentiment read on the larger players out there and what they're doing in the market. So it's pretty valuable info as far as finding your edge and helping out your strategy a little bit. So again, at Saying Lucci, everything on YouTube, the easiest way to find me.
Awesome, Anand. Thanks for joining us today. Appreciate it. Larry, over to you.
Yeah, thanks. The best way to find me is just go to powercycletrading.com, and you'll pull up my site and see everything that we offer. Virtual trading room open each and every day. All my trading tools and trading model for directional trading, and then the other things and other courses that I've taught. A lot of it mostly based on a lot of options, pairs trades, seasonality type trades, futures trades. So cover a little bit of everything and cover really in depth. So if you'd like to check out my information, powercycletrading.com.
Okay, Larry, thanks for joining us as well. And finally, Kurt.
Hey, thanks. You know, it's a pleasure being here once again. You can go to pristine.com, www.pristine.com, and there you can see we've got a list of free webinars that we offer each and every single week. And you know, I highly recommend that you start there. Get into a webinar, see what we do, see what we're looking at, and you know, have some conversation with us there, and then we can get you into our trading room, see what we do live during the day with exact trades being called, managed, etc. And if anybody's got any questions, they can always email me at kurt@pristine.com. But you know, again, I want to thank David for having me here once again. It's always a pleasure, and thank you, Matt, for doing a great job as always moderating.
Thanks, Kurt. I appreciate that. All right, folks, and obviously Matthew Buckley. If you guys want to give a quick 2-week test flight of what I do here at TGO, you can go to topgunoptions.com/intermediate-flight. We have 3 different levels here: primary, intermediate, advanced. I'm no rocket surgeon. I just stole those from Navy flight training in Pensacola: primary, intermediate, and advanced. So if you kind of know a little bit about options, this is perfect for you. You can take a 2-week test flight into what we do. We do live trading. We send out alerts as well via email and SMS, and then you can get a couple copies of our manuals as well. The OPCL, which is the options pocket checklist, the primary workbook, intermediate workbook, and it's $28 for $375 worth of value. Or if you're interested in more of what we do here, there's our support at Top Gun Options, and also our telephone number for our client advisor, Miss Annie Santos. That's why I say I'm going to Brazil when the balloon goes up here in the United States. So, okay, well, great roundtable today, guys. I took a lot of notes actually as well. I got a couple of trades I'm going to look at based on what you all said, and I'm going to get my Apple trade out to my subscribers. David, I'm going to toss it back to you, my brother. Thanks for having me again, and nice job with the guests.
Yeah, thanks, guys. Great show. And just want to remind everyone, you can go to TimingResearch.com/reports to download the most recent or any past reports there. Also, I want to thank Matt too for actually recommending the question that became question 4, and then his, and that was a great addition that he made to that as well. So if anyone watching has a idea for a future question, just go to TimingResearch.com/question, and you can recommend that there. Also, be sure to go to TimingResearch.com/current survey next weekend and fill out the next survey before the next report comes out. So just want to thank my guests again, Sang Lucci of SangLucci.com, Larry Gaines of PowerCycleTrading.com, Kurt Capra of Pristine.com, Thomas DeLello was supposed to be on today too, but he had canceled, so we'll have him back again soon. And of course, Matt Buckley, thank you for hosting again. Thanks, guys.
Thank you.
Thanks again.